We have a lot of gaps going all the way back to the presidential election, like the gap we see right here on the small caps, like what we see out here on the QQQs, like what we see on the SPY. Now, has Jay Powell actually changed the dynamics of the market? Because today at 3 p.m., Jay Powell came and took the podium, and we talked about this during the live stream. I was not expecting big moves in the market. Well, you know what? When we look at the heat map, we see a sea of red out there, and we look at the fear and greed index. Yesterday, we hung around between 68 and 69. Today, we're back at 61. We look at the most recent investor sentiment survey, another very bullish reading, 49.8. Are the bulls finally going to get trapped up here? And we're about to see stocks come crashing lower. Now, as we come over and look at how the indices fared across the board, the Dow was down 207 points. The NASDAQ was down 123 points. S&P 500 down 36 points, with the Russell 2000 being down 3.17. Now, we look at advancing issues versus declining. We had 68.8% of issues declining on the day. Then when we come over and we look at the sectors across the board, every single sector was in the red except for energy. Energy was up 0.67. The big laggard out there today was healthcare, industrials, consumer cyclicals, a lot of red out here. Now, financials also did not fare that well. It was just barely down a bit. And if we come over real quick and we take a look at the XLF today, basically starting to consolidate up here, looking like it may want to come down and fill the gap. Now, when we look at the dollar index today, we saw the dollar index rocketing once again. And we know normally when the dollar is on the move up, what do we see? We see gold on the move down. But now, gold is at a very interesting place, which is something we talked about today during the live stream. Now, if you want to make sure you don't miss the next time I go live, make sure you're subscribed and the bell notifications turned on for all. But what we talked about today in the live stream was the fact that we're right here near this high volume area on the composite profile. That is one of the targets we've been talking about during these videos as well. But also, if we were to grab a Fibonacci retracement measure from the swing low all the way up here to the swing high, notice where the 50% level retracement is, right near this high volume area. And the fact that today we were able to close with a hammer candle also could lend to the case that maybe we're about to get a bounce in this market. We look out here on the 4-hour chart, and as we were coming down making new lows, the MACD barely made a lower low than what we have from this swing point over here. And it's looking more and more like we're getting ready for a bounce up in gold. Now, if you look at the MACD lines, it looks like they're just about to cross. And if we're going to get a bounce, where might gold actually bounce towards? First target I'd want to look at would be this high volume node right here, about 2,611. The next area would be this high volume area up here, around 2,667. Now, one thing we can do, we can also pull a fib from the swing high down here to the swing low, and notice the 50% level would be right up here towards this high volume area. Now, today we're talking about the VIX. The VIX was down most of the day, but then late in the day, what happened? Well, Papa Powell comes out and the VIX goes rocketing on up. Now, if we look at some of the things that Powell had to say, Fed Chair Powell says there's no need to hurry on cutting rates, along with Powell says rate cuts are still underway. So there's no hurry to cut rates, but rate cuts are still underway. I don't know, has me scratching my head a little bit there. Then if we come over and we look at the Fed watch tool, keep in mind, our next FOMC meeting is in 33 days. And as we scroll on down, we saw this was elevated. I think this was up in the 80s in terms of a quarter point rate cut. Now we are seeing a 37% chance the Fed is basically going to do nothing at the next FOMC meeting here in just a couple days. Let me know in the comment section down below. Do you think the Fed is going to be cutting rates or standing still at the next FOMC meeting in December? Now, during Jay Powell's speech today, he also talked about today's reading on PPI was slightly more upward bump, but I still think we are on track for inflation. So if we come over and look at what today's PPI reading was, notice, all right, they were forecasting month over month 0.2, that's what we came in at. But previously we were at 0.1. So to me, that seems like we were creeping up more towards inflation. Then we look at the core PPI month over month, we came in at 0.3, which was right in line with forecast, but previously 0.2. And the last time I checked, 3 was greater than 2. So what do you mean inflation's on the right track? I'm a little bit baffled by that comment. Now we can also see right above that reading, Powell also says we have space to cut rates if needed. So we have space to cut rates. Hold on, rate cuts are not guaranteed. And what do we think the market was doing with that mixed messaging? We see the VIX on the way up. We saw the small caps crashing down all day long. The small caps essentially this morning gapping up only to come down throughout the whole day. And we're talking about this on stream that once the Once the small caps pick a direction, they tend to go that way for quite some time. And as we come over and we start looking at the daily chart, notice we have breached gap support, and now we're starting to work our way back a little bit lower. One of the areas I think we're likely going to come back and test in the near future is going to be this box, one that could come down towards filling the gap, but maybe we don't come all the way down there first. Maybe we come here, kiss it, and go back up. Keep in mind, tomorrow is Friday. Fridays tend to be more bullish than bearish. And if we look at the economic calendar for tomorrow, what do we have on deck? Well, essentially at 8:30 a.m., we have core retail sales coming out along with the Empire State Manufacturing Index. Now I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment. But if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. Now, if we jump over and take a look at the diamonds today also having that round effect. On the daily chart, MACD indicators still look strong. On the hourly chart, now we're down towards the zero line. So will we see the Dow creeping down towards gap support, potentially getting in a bounce, or are we about to go down and start filling those gaps as early as tomorrow? Now we come over and we look at the QQQs today. What do we see? Well, now we've had a couple of little red candles back to back to back to back, and we're just basically in this minus development area trying to fill this area out. Now, after hours, we are down a little bit more, down about 94 cents. We look on the 1 hour chart, MACD indicator is just about to cross to the downside. Now, one of the gaps I said I thought would be filled this week is down here about 505.61. I still think that could be in the cards. And we also want to be mindful, right? This last move up, we pull a fib from the swing low to the swing high. The 38% retracement, which would be considered a minor retracement and what could still be a very bullish move in the market, would still be enough to fill that first gap. Then as we dive down, we start looking at the 1 hour chart, we are below the zero line and we're starting to get that roll effect. We'll see, do we fill the gap and then potentially turn back up? Or are we going to come all the way down here towards gap support, or even worse, going all the way down here and filling the gap, the elections? As we come over and look at the futures markets real quick, what do we see? Well, on the 4 hour chart, we've almost made it all the way down through this minus development area. Now, one of the areas we've been talking about on the stream is coming down towards this high volume node. Said if we can crack this area, maybe we come down there. Then as we actually grab our Fibonacci retracement, measure swing low to the swing high, notice the 38% retracements just beyond that point. So far this week, we've only had a 390 point range. Last week, we had a 1,252 point range. So far, we still had a relatively tight range so far this week. So do we simply back and forth through this area, maybe make it down towards this volume spike, and then maybe start to work our way back up and kind of go back and retest some of these breakdown areas? That's something I do want to keep my eye on. Then as we come over and look at the daily chart, notice we melted down, going all the way down towards S2 today. Now, one thing to note, we are closing below value area low. So you guys know my MO. That's going to be a high probability target for me for tomorrow or the following day, which comes in at 21,049.75. We have the point of control up here at 21,097.25, with value area high being all the way up here at 21,158.75. So let's see, can we get a retest of this area today or maybe even tomorrow? And then we'll see, do we continue the trend downward just a bit? One thing to note, when we're looking at the weekly chart, we have a large ranging week, and this could be the same thing to be said on a large ranging day. A lot of times the next day, in this case, next week, since we're dealing with weekly profiles, tend to be a D-shaped profile. So we probed a little bit higher, probing a little bit lower. Do we return back towards the center point as early as tomorrow? Now, the day before the bell, Disney had earnings coming out, and Disney was helping prop up the Dow Jones. Look at the candle though, a huge shooting star type of candle after breaking out of this rising channel. Now we have not made it all the way up here, quite filling the gap just yet. And as you look on the 4 hour chart, it's looking like we may want to start working our way back down. But one thing to note, when we have large gaps like this in the market, quite often they take a little bit longer to fill. It's not just a gap and crap and we come all the way back down. We look at what are the expected big movers today. AMAT after the bell, plus or minus 7%. Tomorrow, BABA is going to be out, plus or minus 8% on BABA, something we want to watch out for tomorrow morning. Now, as we come over and look at the SPY on the daily chart, you see we're starting to get that roll effect. The MACD indicator is still bullish, but when we dive down, look at the 4 hour chart. MACD lines just about to cross to the downside. And let's not forget, all right, we have two large gaping gaps, one from the elections and then one the very next day after. So about 590.97 would make sense for a retest of that price point. On the hourly chart, MACD indicator almost at the zero line, and this could be nothing more than upper level consolidation, and we start to turn and work our way right back up. On the 30-minute chart, the MACD indicator is below the zero line. And as we start to look at this, I want to go ahead and map out this area. This minus development area, I think, has a great chance of getting re-auctioned tomorrow. We breach through that area. I'll be looking at the next minus development area. Now that zone is going to be 594.38 to about 594.69. The next zone, I'm going to go ahead and map this out for you guys as well. It's going to be right up here, anywhere from 595.68 to about 595.90. Now, when you come over and look at the futures markets on the 4-hour chart, we see we've had that rounding effect, that rolling over. We're a little bit off of the low at this moment, but look left. And what are we doing? We're basically coming into this minus development area, which on Sunday's video, we talked about this as well. We have a lot of minus development areas at some point will come back and get re-auctioned. This week, we've already taken out the point of control. Now, I do think that we're going to spend a little bit of time back and fill in this area. If we continue to go lower, one of the targets is going to be on the edge of this minus development area right down here. But first, we need to get through some of these high volume spikes out here on the profile. And that's going to come in about 59.58 down here to about 59.33. Now, as we come over and look at the 30-minute daily profiles real quick, let me go ahead and clean this chart off just a bit. Notice, what are we doing? We're closing way outside of value. Value area high is going to be up here at 5988.25. The point of control is going to be 6004.75, with value area high being 6022.25. So what does this mean? Highly probable at some point we're going to try to make a push back towards value area low. Now, if you look at where we are now, that's about 18, it's about 17 points or so from the current price point. So for me, that kind of makes sense to see, can the market push all the way back up towards that price point? Also, if we do breach above that before the point of control, I would want to go ahead and target this minus development area. And I would want to watch the market closely. If you're looking to play the rotation up towards the point of control, if we get into this minus development area, watch out, because we can simply hit into it, boom, reject right back down. But this should act as a magnet, but I do not want to target this area unless we are trading back above value area low. Now, if you want to see how I lost over $2 million in 2 days trading the futures markets, watch this video right here.